So hi everyone, it's Jordan right back here, and in this video we are going to be looking at trend lines. So in this video we are specifically going to be starting off with uptrend line. Okay, so an uptrend line looks exactly what you're seeing on the screen right here. This line here, which is red, this is what we call the uptrend line. Okay, so in an uptrend line, we see that we have an uptrend because it is an uptrend line. Okay, we have an uptrend, and then we have these support levels which the uptrend forms, and then we connect them to create this uptrend line. Okay, so trend lines are probably the most common form of technical analysis in forex trading, and they are probably one of the most underutilized ones. Okay, if drawn correctly, they can be as accurate as any other method which we use for trading like patterns. Okay, so unfortunately, forex traders don't draw them correctly, or they try to make the line fit the market instead of the other way around. So what happens is that people tend to force. So for example, you can see that if someone is having an uptrend like this, okay, so they can try to come and force these two lines to meet and create a break. And after crossing this line here, sorry, this support level, to connect to this support level, let me do it correctly. So for example, you can have, so they can come and try to force these two to meet, and then here they create a break, so which is still a false break. And because of this inaccuracy, that is one of the major causes of losses when we trade using these trend lines. So to draw forex trend lines properly, all you have to do is to locate two major tops or bottoms, and then you connect them. So we have to look at two major support levels, and if you're in an uptrend like this, so for example, and look here, this one is major because this support level is major because it initiated a big move. This one is also major because it initiated a big move, but this one is now a minor support level because you can see that here the move up was small, and even this one becomes minor. So what we would do is to join these 2 points, and then you come connected to this one and still connected to this one, and then we ignore these two because these are minor support levels, because they initiated a move which was not supposed to be within the market. This looked like a small uptrend within a big uptrend. So for example, if you see the price move makes a wave up within this wave up, and when you go to a lower time frame, you can see that it is a series of an uptrend. So we looked at this in types of trends or market movements. So I recommend you go back and watch that video. You will be able to understand it very properly. So what we do is, when we are drawing the trend lines, we have to make sure that we connect the major support levels and ignore these minor ones. So for example, this one would become minor, and then we connect these 3 points and then leave out this one. Okay, so an uptrend line is drawn along the bottom of easily identifiable support areas. Okay, so if you can see that if this is our uptrend is just being initiated, if the market is there, what we do is that we can come and connect to this initial support level. We connect it to the second one, and then you can see that here we have created the trend line. So if we have two points, two support levels, they are enough for us to create a trend line. But when you make 3 points, the trend line becomes a valid trend line. So it means that the trend line has become a strong one if it is tested 3 times. So this is 1, 2, and then 3. So here we expect the market to come and test a trend line and then bounce off, come and test a trend line and then bounce off, or sometimes when it breaks and then we reverse. Okay, so this is also known as an ascending trend line. Ascending means that we are moving forward. So if the price is increasing, it shows that it is an ascending trend line. So we can trade the ascending trend line using the bounce setup strategy or the counter trend trade strategy, or we can use the breakout strategy or the break and retest strategy. So within this uptrend, so for example, here you have an uptrend, and then you have your uptrend line or the ascending trend line. So here you can trade using the bounce setup strategy, whereby you wait for the price to come and hit the trend line and then bounces off. So we make buys within these on these support areas. So for example, here you could make a buy, here you could make a buy, here you could make a buy, then here you could still make a buy. So the counter trend trade strategy is whereby you trade against the current trend. So because you know that if the market moves up, it has to make a retracement. Okay, goes high, goes down, goes high, goes down. So at this period where it is coming back to test on the trend line, we could make a short trade from the wave up and wait to catch the profits on the trend line. Okay. So the other one is the breakout strategy, whereby if the price is on an uptrend like this and it comes to break out of this trend line, we make a sell stop order. Okay. And then we can be able to catch the wave down. Or the other strategies whereby we wait for the market to break and test on a trend line and then we catch the wave down. So we shall be seeing all these strategies within this video. So an uptrend line looks exactly what you're seeing on the screen right here. So the price is on an uptrend. Okay, and when it is on an uptrend, we agree that the price makes series of higher highs and then the higher low pattern. So these lows are the ones which are called the support levels, and they are the ones that we connect. But when you're going to connect, we have to find the two major points and then connect them. So for example, we can come and connect these 2 points like this. Okay. So what I can urge you out also is that if the price, if you have a trend line like this, okay, it is not a must for the price to come and sit on your drawn line as a must. So sometimes you can see that you have your trend line, okay, but and the price comes, stays slightly higher, not on the, does not touch the line exactly, and then another one comes to touch, another one doesn't touch, and another one comes to touch. This one still remains valid, okay. So it is not a must for the market to come and hit on your line you've drawn, okay? It is not a must at all. But as long as the market is within a clear uptrend, we can even connect 2 points, one which is down and another one which is high. So for example, if the market is like this, you can come and then connect these 3 points like this, and then you ignore these rest ones, okay? So these ones becomes the major support areas. So these ones that become the minor support areas. So when the price comes to break these levels, that is when we make a trade, okay? So the bounce setup strategy and then a breakout strategy. So a bounce setup strategy, we said that when the price is on an uptrend, what happens is that the price goes on to make series of higher highs and then higher lows. Okay, goes up, goes down, wave up, wave down. So that is how the uptrend looks like. But in the later videos, we saw that within this uptrend, still we can still have a small series of higher high and then higher low patterns. Okay. So here what we do is that we locate the major support areas. For example, this one is major, connect it to this one, we can connect this one also, and then we can still connect that one. So that is when we draw our trend line. So within the bounce setup strategy, what do we do? Number one, we wait a price to make a wave up and then correct. When it corrects and then it tests our trend line, we wait for a candlestick pattern, for example, bullish engulfing or a doji. So here we have to wait for a bullish candlestick pattern, and would we make our buy entry point, and then we target the profits at above the previous swing high. Okay. So if you have your trend line like this that you have drawn, so here we wait for the price to go high, comes and then tests on the trend line. If you have 2 points and then you have a candlestick pattern formed here, it means that you're going to come and then you target the profits above this swing high. So when it comes back, tests on the trend line, you form a candlestick pattern, still you make a buy stop order and then you target profits above the previous swing high. Okay. So for example, when you look on this trend line right here, you can see that we have this point here, okay? Then we have this one, then we have this one, and then we have this one that we have considered a minor support because it has not touched, but doesn't mean that it is not a valid one. So here you can see that the market goes high, goes down, we connect, and then here we have a bullish, a big bullish candle. So we could make a buy stop order from here, and then we put our stop loss, and then be able to catch the wave up. So here you can see that we have some dodges. Right here we have these dodges which show indecision, followed by a big bullish candle, which means that the bulls have taken over. So we have make a buy stop order, and then we catch the wave up above this previous swing high. And still here the same thing, we have dodges followed by a big bullish candle, so we could catch a wave up. Okay, so what happens is, now if you're moving high like this, so the market is supposed to break this previous level of resistance. Okay, so if the market comes and does not break this level of resistance, okay, and then it swings onto the trend line, here we do not enter the market again because the structure has been broken. Okay, so if the structure gets broken, now here this one becomes a double top. Okay, so we just wait for the price to come and break this neckline, then we can use strategies that we have been looking at within this channel. Okay, so that is what happened. So if here the market came and then it remained at this point and then it retraces here, we wouldn't make a new buy order because the structure has been broken. It means that the bullish run has been ended. Okay, so we either wait for the market to break and then come back. So if this level here, this would be a double top. So if it comes and then it breaks, it means that it has resisted this double top. So here again we could make our buy entry to target the profits above this level. So that is how we trade the bounce setup strategy. We wait for the price to come and test on the trend line, form a candlestick pattern which is bullish. So we have already made videos about the candlestick pattern, so you can go and watch them. And then that is when we make our buy stop order. We target the profits on the above the previous swing high. So if here we make a buy order, we have to target above this level here. Okay, and even here if we make a buy order from here, you have to target above this level here. Okay, so you can see that now right here we are expecting the market to come and test on the trend line. So what happens now, look here, if here this look to be a valid trade to take from here to make a buy, but we don't have a clear candlestick pattern right here. We don't have any candlestick pattern right here to use. So if here we had maybe a bullish engulfing, a tweezer bottom, or a doji followed by a big bullish candle, we could make a trade, but there is no way to make a trade because there is no clear candlestick pattern. Okay, and then when you're going to enter the trades, you have to use limit orders, a buy stop order. Okay, so that is it for a bounce setup strategy. For the breakout strategy, for the breakout, it means that the price has broken out of the structure that you have on your market. So if the market is having an uptrend line like this, and then you have this break test. So we wait for the market to come and break through this trend line. When it breaks through the trend line, on the breakout strategy, we don't wait for retests. We just make a sell stop order and be able to catch the wave down. But in most cases, when you're putting a stop loss, you have to factor in the fact that the market can come and test on the trend line and then it moves into the direction you want. So for example, right here, you can see that here you have your clear trend line, okay? And then this candle here, this big red candle is the one which broke out of the structure, okay? So here, we do not enter at this candle. What we do is that we wait for a candle that closes entirely below the trend line, okay? So for example, this red candle right here, this is the candle which broke out of the trend line completely. So that is the candle we use to make our sell stop order. Why don't we use the candle which closes below the trend line? Because this could be a market fluctuation. From here, you could make a sell order and the market comes back here and makes a bullish engulfing, and then it continues into the bull run. Okay, so we just have to wait for a candle that closes entirely below the trend line to filter out those market fluctuations. It could still go back from here, but these are rare cases compared to where the market can come and make here a bullish engulfing or it can come and create a big bullish candle and then the market reverses. So here wait for a candle that closes entirely below the trend line, and then we make our short trade to catch the wave down. Okay, so that is the breakout strategy. You wait for, you have your uptrend line drawn clearly, and the market is bouncing off this trend line. Okay, so when it breaks out of the trend line, we wait for a candle that closes entirely below the trend line, and then we make our sell stop. So we are going to be looking at the break and retest strategy, just like the strategy sounds. In the break and retest strategy, we have our trend line. Okay, so we wait for the market to come and break out of this trend line, and then comes to retest. If the market breaks, we wait for a retest, and then we wait for a candlestick pattern after a retest, and then we make our short trade. So the candlestick pattern right here we are waiting for is a bearish candlestick pattern, because we are expecting the market to reverse after breaking this trend line. So for example, you can see right here you have this trend line. Now, when you look at this trend line, another person would have come and drawn it like this, forcing these 2 points to touch the trend line, and then that would lead to a clear loss. So here you can see that we connected these two major support levels. Okay, so when we connect these ones, we can see that here the market broke out of this trend line, and then it came to retest. Okay, after retesting, here we have 3 white soldiers. You can see that these are 3 clear bearish candles, which are 3 black crows, not 3 white soldiers. White soldiers are bullish, and then black crows are bearish. So in a white soldiers, these are series of 3 clear bullish candles, and then black crows are series of 3 clear bear candles. So here we have the 3 black crows. Okay, so right here we have 3 black crows, so we could make our short entry after those candlestick patterns, and then we catch a wave down. So you can say that here the market tries to go back, but still in the long run it would come back. Okay, so that is how we trade the break and retest. Number one, we wait for the market to come and then break out of the trend line. Then we wait for a retest, wait for a bearish candlestick pattern, and then we put our sell stop order to catch the wave down. So here you want to do a simple recap on what we have been looking at. On recap, we said that an uptrend line is drawn by connecting two major support levels. Okay, and when we connect more than 2 major support levels, the trend line becomes a stronger one. So the more the trend line is retested, the stronger it becomes. And then if a trend line is strong and it is broken, it initiates a big bearish movement. So when we can trade it using the bounce setup strategy, whereby we wait for the price to come and then bounce off this trend line and wait for a candlestick pattern which is bullish, and then we make a buy order. So we make buys on these retests. Okay, and then the other strategy is the breakout strategy, whereby we wait for the candle to close entirely below this trend line, and then we make a sell stop order. So another one is whereby we wait for a breakout and then we make a retest, then we catch the wave down. Okay, so for example, here we could make a buy order from here after these clear bullish candles. Even right here after some dodges and big clear bullish candles, we could make buy. So we could buy from here and also buy from here. So on the breakout strategy, we could wait for a candle that closed entirely below. So this could be our entry point on this blue candle. This is where we would put our short trade to go and catch at the next level of support. That's where the target profit is. And then for the retest, we wait for the candle, we wait for the breakout. Then here there is a retest, and then we have here a clear bearish candle. So we could make our entry point from here, and then we wait for to catch the wave down. So that is how we trade using this uptrend line. Okay, and thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this and for support. I'll see you in the next video. Bye bye.